Saya wis mau dokumen iki saya akan ada ini. Hari ya, mau patang kan. Doctors, can you hear me well?
Yes, sir.
Yes, sir.
Right. Here, this is regarding the financial statement analysis. Here you have ratio analysis uh, topic here. Then I think last time we discussed about the main ratios and what are the ratios and how we calculate those ratios and how to interpret the results. Am I correct, doctors? Doctors?
Yes, sir.
Right. Now today again I want to remind you to the way of preparing the ratios and how to interpret the results by using financial statements, right? Here I extracted a few financial statements here. Then how to extract some figures to complete your ratios and how to interpret the results. That is the main task today. Actually, as per my time limitation, so I have to work with you today only 2 hours time, right? Then tomorrow, Senior Professor Chitra Ranjane will discuss about the finance part. So finance, how to collect funds and how to invest funds and how to make different types of short-term and long-term decision making, right? Then that part will be covered by Senior Professor Chitra Ranjani. Then today I hope to continue this ratio analysis. In addition to that, so we have short-term decision making and the long-term decision making. So after completing those parts by Professor Anjani, so I can join with you again, right? Right now, if I move to today session, so here we discuss the importance of different types of financial statement analysis and ratios. Just today, I want to discuss number of examples relating to financial statement analysis, right? Then if you have any doubt regarding this discussion, so you can anyway you can disturb me and ask question, right? Okay. Here if you read this question, right, this is these are the extracted financial statement information. Then one kind of profit or loss statement or the income statement, right? Income statement here, income statement, you can see information here. What are the available information in a financial statement? Now this is the income statement, right? It is yeah, profit or loss account, or the otherwise we use the term income statement, right? So uh, in, instead of that, this, yeah, you can use income statement, right? Income statement or profit or loss account, right? Profit or loss account, right? Normally, actually, main purpose of this kind of statement is to show the profit or loss, right? Profit or loss, right? So, in order to show the profit or loss, right? So, our main purpose is to show the profit or loss of through this, or otherwise operating performance of an organization, right? So you can, yeah, if I take this into this side, that is better, I think, right? Income statement for the year ended 31st, right now you can see December 2023 and 2024, right here, 2023 here. Normally, another important point when you are referring different types of finance, can you see this PowerPoint? Can you see this
Yes, sir.
PowerPoint? Right.
Yes, sir.
So when you are working when you are reading some financial statement published by different organization, so normally you can see the current year here. This is the current year, right? Current or the present year, right? Current year. Then this is the previous year, right? So because important thing is the current year. Then additionally then provided yes, additionally provides provides this previous year information. In some cases, as I mentioned last day, so they are, yeah, some organization they provides during last 5 years information or 10 years information. That is also possible, right? Here net income, yeah, net sales, right? Net sales. Net sales mean after sales, then there may be some returns as well, right? So after getting the net yeah, value, that is called net sales. Net sales is these are normal sales. If you think about the service oriented organization, you can see the revenue, right? Revenue. We are using the term revenue, not the sales, right? Then if you think about the electricity board, so they are having mainly uh, uh, revenue, right? Not sales, right? Then less cost of sales. Cost of sales mean, so what is the respective cost of this particular items? Now we solve these items for 200, but what is the real value of this particular that real cost of this particular amount? That mean unit of sales, right? So then they are selling this for 200. Actual cost of that particular stocks is 90, right? Then what is that is called gross profit. Gross profit, right? Gross profit, right? This is not the net profit, because we have different types of operating expenses. We have to maintain our that means sales divisions, administration division. We have to pay for our employees, right? So we have to maintain some other facilities, then the lighting or the water and other expenses. Maybe they are operating and yeah, expenses. Then we have to reduce that part from here, right? Then we can obtain the, yeah, after reducing this 70 from 107 110, so you can see the operating profit. This is called operating profit. Actually, in addition to the operating profit, there may be some interest, because interest, right? Interest means we obtain this that means commence these organizations by getting some um, loans from other financial institution and banks and financial institution, right? Then we have to pay then the interest for our interest for our loan annually or the semi-annually. So we have to quarterly or monthly we have to pay. And this is the annual interest amount. Then after reducing this one, this is the actual earnings for the year, or the net profit for the year. Or otherwise we use the term, if you refer financial statement, you can see net income for the year, right? Net income for the year, right? Likewise, so you can see uh, uh, information like this. Now parallelly you can see previous year this much was the profit was, net profit was 54,000, so for 54 million. So in this one 36 million, right? So we can see some reduction in this profit as well, right? So then if you think about other thing, gross profit also reduce, right? Gross profit is also reduced, but we don't know. Yeah, we cannot compare these figures. We cannot compare 200 with 290. We cannot compare 90 with 140, right? So actually, in order to compare the two years or two time periods, or the two or more companies, industries, so it is important to take the ratios rather than the absolute figures like this 200, 290, 90, 140. Those are called absolute figures, right? Absolute figures. So actually we cannot compare absolute figures. If we want to compare, so it is important to go for the ratios, right? So you can see the gross profit ratio, net profit ratio, operating profit ratio. Then we can go for the current ratio, quick ratio. Likewise, there are a number of accounting ratios we already discussed last time, right? So if we calculate them, then we can go for the comparison. Otherwise, we cannot make any comparison through this absolute figures, right? Have you got my point, doctors? Have you got my point?
Yes, sir.
Yes, sir.
Right, right. Then here this is a balance sheet, or currently actually we are using the term instead of the balance sheet. Actually, I wanted to show this balance sheet. Actual balance sheet mean we are showing the assets. Then how we that mean obtain funds. That is the owner's equity and the liabilities. This is the way of funding, right? This is the way of investing, right? Then how to balance these two? So ultimately we should have balance in this total assets should be equal to total equity and liabilities. I think you have remember that accounting equation, right? As per the accounting equation, ultimately what is the accounting equation you mentioned? Yeah, what is the then assets? Yeah, assets equal, yeah, assets equal, yeah, then liabilities plus equity, right? I think you have remember that. Then assets, in this case assets mean total asset, right? Assets mean assets include current assets and the non-current asset, right? Non-current assets, non-current assets. Current assets is here current asset is 360, non-current asset is 200, altogether 560, right? Then this is the left hand side of the equation. Then liabilities. So you can see liabilities including current liability and the non-current liability. Here also we can divide into two, right? Current liability and non-current liability, right? Current liability is here. Current liability last part, yeah. Current liability here is the current liabilities include two component. Total is 80, right? Current is 80. Then non-current liability is here. What is that? Long-term loan, right? This 210, altogether 290 plus equity. Equity mean yeah, reserves, and this is under the yeah, profit. Consider as the uh, reserves, right? Reserves. These are also belongs to the owners of the then capital or the equity share. If it is a company, equity share. Then the reserves, right? Or the retained earnings. This is called retained earnings, right? So then this part is 270. So if we take this total 270 plus 290, this is again 560. Then these two are equal, right? Then that is the nature of that specific feature of balance sheet. That's why I use the balance sheet. But nowadays we are using new terms for this one. This is called a statement of statement. If you download the uh, financial statement, you can see statement of financial position. Financial position. So how to collect fund and how to utilize fund uh, 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 for the from the organization. So this is the way of that, right? I've got here from the uh, uh, financial that mean income statement. Ultimately you are getting net profit. So if it is a tax related company, so you have to reduce the tax part also. This is the then this is the earning before tax, right? Then again we have to reduce the tax part also, right? Then you can see the uh, uh, then profit after tax, right? Net profit after tax also, right? That part also important, right? This here main objective of this main purpose of this income statement is to provide the net profit or the profit making ability of that particular company, right? So then if we go to the statement of financial position or the balance sheet, it shows how we collect funds from other outside. So here then here this is the equity holder, then how to, this is the ownerships of owners, actual owners of the business, equity shareholders, right? Then this is the funds obtained from the outside the organization, that is the loan from bank, financial institutions, or by issuing debentures. So you can see this kind of thing, right? So this is the way of collecting funds. So how to invest them? So then we can invest our collected from for obtaining current assets, right? Current assets, and also the obtain non-current assets, right? Non-current assets also there, current assets and non-current assets, right? Non-current asset is 350. Yeah, this is the current asset. Here is 200, and this is 200. This is 360, right? Don't misunderstand this one. This is 350 non-current assets. This is 200. Altogether 560, right? Right. This is the way of investing, right? So invest this particular amount, 560, then 200 for altogether not 550. Here you can see uh, 480, right? Invest for current assets and the non-current assets, right? So in addition to the available funds, so you can see another one, current liabilities. Current liability means we already obtained the support and the facilities, but we didn't pay for our short-term suppliers and other uh, uh, persons, right? That is, those are called current liabilities. Current liability of the company also one kind of funding system, short-term financing system, right? Short-term financing system. So doctors, so you need to know that if you are running a business, if you get if you are collecting some medicines and some uh, uh, items for your dispensary, so through the credit basis, so that is similar to your capital now, because otherwise you need to have funds to purchase them, right? Normally we are getting funds from the from our own funds, and also the long-term loan. So then we are collecting some kind of items, and we are providing service and obtain the income or the revenue, right? But if our suppliers willing to give some goods and services on credit basis, that is also one kind of short-term financing or funding system, right? So therefore then that part also we have to consider, that is also support for the business, running the business. So when you are running the business, you have to think about that part also. Normally we are saying I don't like to liable for others, then I pay I like to pay cash today. So අපි කියනෝනේ අපි ඩොක්ටර්ස් ලා කියනෝනේ අපි ණය තියාගන්න කැමති නෑ, මෙන්න සල්ලි මේ එහෙම ගණදර කරන අයත් ඉන්නවනේ, right? Can you understand my point, doctors?
Yes, sir.
Yeah. එහෙම කිව්වට ඒක ඇවිල්ලා ඒක good financial manager කෙනෙක්ගේ property එකක් නෙමෙයි. දැන් අපිත් එහෙම කියන අපේ life එකේ අපි හොඳ good managers ලා නෙමෙයි, right? ඇයි අපි liabilities තියාගන්න ඕනේ, ඔගේ වල දානවා එක විදිහේ. Then we can say like that. That is not proper for the business. right? අපි day to day life එකේදී අපි එහෙම කරා වුණා වුන් business එකේදී අපි fund රැස් කරගන්න එක ක්‍රමයක් තමයි, අරමුදල් රැස් කරගන්න එක ක්‍රමයක් තමයි ණයට බාණ්ඩ ගැනීම. අපි සිල්ලර කඩයක් ගන්නකො, දැන් ණයට බාණ්ඩ දාලා යනවා නම් කම්පැනි වලින් අපි විකුණුණාට පස්සේ අපිට අපි අර සල්ලි ණයට අරන් ඉවරලා ණය ලෝන් වෙන බැංක් වලින් අරන් ඉන්ට්‍රස්ට් එක ගෙවන එක වෙනුවට අපිට බාණ්ඩ ගෙනල්ලා දෙනවා නම් කවුරු හරි ණයට අපි විකුණලා දාලා අපිට කිසිම අපිට ආයෝජනයක් නැහැ එතකොට. Right? That is the benefit for us, right? So we have to think about that part also. Then one kind of financing method is the current liability, right? then that part also important, right? However, you can see this kind of information from this balance sheet or the statement of financial position. I think you got this real idea about the content of this income statement and the income statement and the income statement and the statement of financial position, or otherwise you can use the term balance sheet, right? So then we can go to the question. According to the previous experience, 60% of sales were on credit basis, and the remaining part of 40% sales were on cash basis. Then debtors, as at first January 20, this should be 1st January 2024 or 2023. So we have to have other information 2023, right? Then please make this correction, right? January 1st January 2023, right? Can you see this one? Please make that correction, 1st January
Okay.
2023. So this is the beginning debtors. Debtors mean Naigatio, right? So they have to settle their loan for us, right? Then you are required to compute the following ratios for the year 2023 and 2024 and interpret your ratios, right? Then first one, gross profit ratio, return on total assets, return on capital employed, return on sales, assets turnover ratio, right? Current ratios, quick ratios, right? Then inventory turnover ratio, debt turnover ratio, right? Debtors turnover ratios. So we can see different types of ratios here. So then it is important to extract some figures from the uh, financial statement, and also to compute the relevant ratio in proper manner. uh, After computing, it is not enough to compute, so you have to further you have to interpret the results. Then only we can use this knowledge to make different types of decision. So is it clear? Is it clear? මේ ratios අපි ගණනය කරන්න ඕනේ financial statement වලින් අදාළ figures අරන් ඉවරලා ගණනය කරලා ඒක අපි compare කරන්න ඕනේ. අපි අවුරුදු අපිට compare කරන්න පුළුවන් financial statement මේ අවුරුද්දේ financial statement ඊළඟ අවුරුදු වල කලින් අවුරුදු වලත් එක්ක compare කරන්න පුළුවන්. So we can compare that mean current year with the previous year, and also we can compare company A with company B or other competitors, right? Competitive firms compare කරන්න පුළුවන්. So in addition to that, we can compare with the industry average, industry norms, right? ඒ industry අපි ඉන්නේ health industry නම් සාමාන්‍යයෙන් profit gross profit ratio එක කීයද, net profit ratio එක කීයද, අපි ඉන්නේ කොතනද, ඒ කට්ටියට වඩා අපි වැඩිද අඩුද? So we can compare, right? I think you got this point clearly. Am I correct, doctors?
Yes, sir.
Doctors? Yeah, right. Now our duty is to refer this financial statement, then go to this kind of ratios, right? So I will start this ratio from easy to then yeah, with some particular order, right? So I will change the order, right? I think it is better. Right. Now, can you see this order? I already changed this order, right? Doctors, can you see this document? Can you hear me well?
Yes, sir, can see.
Right. Then if we start from current ratio, right? So actually we discussed number of ratios within our class. So then there are five types of ratios, main ratio categories we can divide into five. So then ratios we divide into we divide into five categories. One is the liquidity ratio, right? Another one is we discuss about the uh, uh, leverage ratio, then that is long-term solvency ratio, then activity ratio or the efficiency ratio, activity ratio or the efficiency ratio. Then we discuss about the profitability ratio, and the market or the investment ratio, right? Market or investment ratios, right? Under each category we can see number of ratios, right? So we have to learn lot of ratios here. So then, however, in this case you are given very limited number of ratios, right? So we have to calculate them. So how to calculate them? So first of all, we need to know what is the relevant formula for this one, and what is the purpose of preparing this kind of ratio, right? ඇයි අපි මෙහෙම රේෂියෝ එකක් ගණනය කරන්නේ? මොකක්ද ඒකේ තියෙන ප්‍රයෝජන? හරි? ඒක ගණනය කරන්නේ කොහොමද? ඒකට අදාළ how we obtain some kind of variables to prepare this ratio, right? So after getting the results, so how to interpret the result? කොහොමද ratio එකේ තේරුම මොකක්ද? Right? So those are the key component that we need to know, right? Uh, then if I move to the first one, now ratio analysis under the liquidity ratio, I got current ratio. How to calculate the here? We can calculate by using this formula, right? Here, if I move this into here, that is clear. Right? Can you see this PowerPoint current ratio? Then this is the formula to calculate the current ratio, current assets, then current liabilities. So if you go back to previous example, then you can see current assets and the current liabilities. Current assets, current liabilities, here current liabilities. Under current liabilities, we have two components. So then total is this. This is the current liability. If we take the ratio in between these two, so that is called current ratio. Actually, it is the purpose of this calculation is to show the ability, right? Ability of uh, uh, paying short-term creditors, right? Short-term, that means ability to settle the uh, uh, current liabilities, right? Ability to settle the current liabilities. So how we face for the short-term liabilities, right? So here you can see what are the component under the, we in different organization we can see different component under the current liabilities and current assets. So what are the current assets? Current assets include inventory or the stocks, toggle, right? Stock or the inventory. Then debtors, nagatio, right? Nagatio. So cash and bank balances. Then receivables or accruals, right? Receivables, right? Receivables mean then they have to pay for us. Then loan advances if we are providing this one, right? Then this is loans and advances provided, provided. Then disposal in investment, right? Any other current assets. So all current assets, right? All current assets under this category. Liabilities here, then creditors for goods and services, short-term loan, bank overdraft, bank vairawa කියලා කියන්නේ. So cash credit, right? So if we want to pay for external parties, so then we have to consider all as liabilities. So if we divide current assets by current liabilities, so you can go for the current ratio. So in this case, how to calculate? In this case, how to calculate? In this case, current ratio, current, we can assign values, right? Assign value, current. So you can do this task parallelly, yeah? Current assets we obtain as total of the asset, that is current as 200, current liability 80, right? Then current assets 80, sorry, 200, this is 80. So tell me the answer. Tell me the answer. 2.5. Am I right? 2.5. So 2.5. What is the idea behind that? Right? 2.50 for 2.50. Right? So here actually we have 200 that mean 2 rupees and 50 cents to settle the current liability of 1 rupees. Current liability of 1 rupees. In order to settle 1 rupee of current assets, we have 2 and 50 cent, right? 2 rupees and 50 cents to settle them, right? Then that is a good liquidity position, right? Liquidity position. ඒ කියන්නේ මොකද? අපි රුපියලක් තියෙන වගකීමක් රුපියලක වගකීමක් ගෙවීම සඳහා අපි ගාව 2.50ක් තියෙනවා. That is the simple idea, right? I think you got it clearly. You all can understand English as well as Sinhala, right? That's why I use some Sinhala words as well. So there are some requests for from you, right? Then that's due to those requests, then I will take a few time to explain in Sinhala as well, right? Because this one is somewhat new subject for you. So again, then Tamil people also here, so you can share and you can share your idea with your colleagues, right? Your peers as well, right? Then here I have got it. I have got the point. In order to settle 1 rupee of short-term credit or the current liability, so we have 2 rupees and 50 cents, right? අපිට වගකීම් තියෙන රුපියලයි, නමුත් ඒක සෙටල් කරන්න 2.50ක් අපි ගාව ලික්විඩිටි එක තියෙනවා. ඒ කියන්නේ අපේ හොඳ ද්‍රවශීලතාවයක් ව්‍යාපාරයේ සතුව තියෙනවා කියන එක තමයි කියන්නේ. then මේක වැඩි වෙන තරමට හොඳයි කියලා කියන්න බෑ සාර. so එහෙම කියන්න බෑ සාමාන්‍යයෙන්. So what is the as per the interpretation part, right? Generally accepted current ratio should be 2 to 1, right? 2 to 1 or 2 to 1 mean answer should be 2, right? If it is 2 to 1 mean actually it is better to say current ratio we can show as this kind of pattern, right? Then current assets, then colon current, right? current liabilities, right? Current assets to current liabilities. In this case, you can write 200 to 80, right? Ultimately, you can see 2.5 to 1, 2.5 to 1, right? That is also one method, right? It is enough to take 2.5, right? That is okay. Then if you take 2 to 1, right? Now here this one 2.5 to 1, right? Yeah, 2.5 to 1. This is the answer. Otherwise, your answer may be 2.5. Right? Both are correct. Huh? Both are correct. So if we are writing 2.5 here, right? So you can write either this way or this way. Right. Then generally accepted current ratio should be 2.1. 2.1, or otherwise if you go to this pattern, it should be at least 2, right? 2, whether or not at least, so the 2 is better, right? Or not a specific ratio is satisfactory, depend on the nature of the business and the characteristics of current assets and liabilities. So then even we have this kind of generally accepted level is 2, right? But we cannot exactly say 2 is the better one, right? When you are running the business, it is depend on the nature of your business, right? If you are having enough if we are having enough suppliers, right? If we are having enough suppliers, and then without having any issue, then if you are given unlimited credit period, so then that differ from other businesses, right? So we cannot exactly say then it is better to have a current ratio of 2. So then that is depend on the business, but generally we accept, right? Generally, if we are not aware with the other factors, then we accept generally this ratio 2 is better. What is the 2 mean? In order to settle 1 rupee of current liability, we have 2 rupee of current assets. That's the idea. Have you got it, doctors? අපැදිලා අහන්න ඕනේ. This is very interesting part, right, in this cosine ratio analysis. Doctors, පැහැදිලිද? Doctors?
Yes, sir, got it.
Right. Then can you calculate this one? In this case, to answer is 2.5. 2.5. Then what is the idea? Can you brief? What is the idea? Yeah. In order to settle 1 rupee of current liabilities, the firm or the company or the organization has 2 rupee and 50 cents, right? That is over the standard norm, right? The standard norm is 2. If it is 2, but that is better. But now over that point, right? Is it clear? So now we can go for the second one, quick ratio, or that is called acid test ratio. Quick ratio, kshanika anupate. Previous one, current ratio, that is called jangama anupate, right? Jangama anupate, current ratio. Now this is quick ratio, kshanika anupate, right? Then how to calculate it? Quick assets over current assets. Previously we got under the current ratio. We got current assets over current liabilities. I think you will remember. Now instead of current assets, now we are getting quick assets. Quick assets. What is the quick assets? What is the difference between current asset and a quick asset? So within the current assets, we can see some kind of items. Those are not liquidity in proper manner, right? Those are not much liquid, right? Liquidity කියන්නේ මොකද්ද? අපිට then what is the ability to sell that particular item without making loss within a short period, right? As per the request, so we should pay for our creditors, so the short term suppliers. So then then we should have a liquidity. Liquidity mean then that is the possibility to pay quickly without having a loss, right? Then here in this case, within the current asset, yeah, what are the component of the current assets? Yeah. Here you mentioned that current assets include inventories, sundry debtors, accruals. Accruals mean then some we have some uh, uh, prepaid expenses, right? Prepaid expenses. Then cash and bank balance, right? Out of this, some are uh, then more or much liquid assets. Some are not liquid, right? So, for example, inventories. අපි තොග තියෙනවනේ, තොග එකපාරටම විකුණලා මුදල් කරගන්න පුළුවන්. තොග එකපාරට විකුණලා මුදල් කරගන්න පුළුවන්. Then that is under the less liquid assets. Less liquid assets, right? So, in order to obtain the quick assets, we have to reduce less liquid assets from the current assets. right? Current assets කියන්නේ අපේ අපිට ක්ෂණිකව කෙටි කලක් තුල මුදල් කරගන්න පුළුවන් දේවල් තමයි current assets කියන්නේ. දැන් මෙතන අපි කතා කරන quick asset කියන්නේ ක්ෂණිකව මුදල් කරගන්න පුළුවන් වත්කම්. ඒකට අපිට මේ තොගේ වගේ දේවල් ක්ෂණිකව මුදල් කරගන්න බෑ. So another one prepaid expenses. Prepaid expenses කියන අපි කියමු අපි light bill වැඩිපුර දැන් මේ සැරේ light bill 9500යි අපි 10000ක්ම ගෙවුවා. right? So then that is the 500 is called prepaid expenses. අපි වැඩිපුර ගෙවලා අපිට ඒක වත්කමක් බවට පත් වෙනවා. අයි අපි ඉස්සරහට අපිට සර්විස් එකේ 500ට ගන්න පුළුවන්. So that is one of assets for the business, right? But the problem here, if you want to pay for a third party, so can you return that 500 from the electricity board or the water board? You cannot do that. Therefore, those are called less liquid assets. Less liquid assets. Can you understand them? Therefore, we have to reduce less liquid assets from current assets to obtain the quick assets. සනික වත්කම් ටික හොයාගන්න නම් අපි කරන්න ඕන මොකද්ද? මේ ජංගම වත්කම් වලින් අඩු කරන්න ඕනේ තොගය සහ ඒ වගේම ඉදිරියට කළ ගෙවීම. හරි? ඉදිරියට කළ prepaid expenses. Right? So then we can obtain the quick assets. Have you got my point? The current liability remain the same. Right? Have you got my point, doctors?
Yes, sir.
Right. Then you calculate this one in this quick asset ratio for our example, previous example. Go to the example. Go to that financial statements. Statement of financial position of the balance sheet. Tell me the answer. Yeah. Current asset is 200. Right? Then quick asset, you have to obtain the quick asset. Quick assets equals current assets minus inventory or the stocks inventory or stocks, right? Plus prepaid expenses. Then we have reduced these two from current assets. For example, here current asset is 200. Then inventory inventory is 12. Prepaid expenses, it is not given here, right? Therefore no need to reduce others, right? So then we have to reduce 12 from here. Then your answer is 188. That is the quick assets. Current asset current liability remain the same, 80, right? Then how to apply into the formula? Here quick assets equals, what is the quick assets, doctors? We calculated 100.
88.
88, right? Then the current liability 80 remain the same. So tell me the answer. Tell me the answer.
2.35.
2.35. Normally, that is less than the current asset. Current asset 2.5. Now this one 2.35. Right? Is that correct? Right? The way of obtaining the current assets minus inventories and prepaid expenses. Right? Current liability, you know that. Then interpretation part here, the asset test ratio, the quick ratio 1.1 is considered satisfactory unless the majority of quick assets are in income receivables and patterns of accounts receivables collection lags behind the. Don't think about it, right? Then just think about here, if it is 1.1, that is better, right? 1.1, that means 1 to 1, huh? Or otherwise 1.1 1 to 1, no, answer is 1 again. 1 to 1 mean here quick assets, right? quick assets to current liabilities. If quick assets is 1 to 1, that is that call, otherwise we can see answer as 1 is better. So if you take this one, this your answer should be 1, right? But in this case your answer is greater than that, 2.35. So this is above to the standard norm, standard or the accepted level, right? That is good in terms of liquidity position, right? Liquidity position is good because our standard liquidity position is 1. Now we can see 2.35, right? Then above the standard level, right? Then this company, it is a good company in terms of liquidity, right? Have you got it clearly, doctors? So I am calculating then this particular ratios only for year 2023. Then your duty is to calculate it for year 2024, 2023, right? 2023. So I am calculating only for 2024, right? Then if you have any doubt, you can ask. Huh? Right. Next one is this is leverage ratio. Previously we discussed about the liquidity ratio. Now we are talking about the leverage ratio. Leverage ratios shows the combination of combination of uh, uh, shareholders equity or the equity capital and the loan capital, equity capital and the long term loan capital or the credit, long term loan credits. So then what is the ratio of them? So there are a number of ratios, but I got only one here. Long term debt to shareholders equity, that is called debt to equity ratio. So another one, long term loan, yes, long term loan over uh, uh, total capital. That is also one kind of ratio. Last time we discussed, right? So you can obtain this one, long term debt over shareholders equity. So if you go back to this one, do you have long term loan here? Here in this example, I think no. Yes, bank loan here. Bank loan 210. Bank loan 210. That is a long term loan. Then the owner's equity, that is 270. 270. Right? So this is the how to obtain this uh, figures from the financial statement, right? So here right? Then this is the equity capital, right? This is the equity capital. This is the loan, that is the debt capital, debt, ණය ප්‍රාග්ධනය. then අයිතිකරුවාගේ ප්‍රාග්ධනය ණය ප්‍රාග්ධනය අතර අනුපාතය තමයි මේ leverage ratios වලින් ගොඩක් බලන්නේ, right? So here you can obtain answers here. Long term loan capital, that is 210, owners capital 270, 210 and 270. So you can multiply this by 100, or yes, you can show as the percentage as well, right? Percentage as well. So otherwise you can use as a decimal or the percentage, right? Then 210 over 270 into 100. What is the yes answer? Please tell me.
0.777.
0.77 or otherwise 77%. Am I correct? So normally you can see 0.7. If you multiply this by 100, you can see 77 or 77.77. Yeah, you can get it, right? Don't worry, you can calculate it now, right? Then actually this is called debt capital, debt capital. This is called equity capital, equity capital, equity capital. Debt capital over equity capital, that is the debt equity ratio, debt equity ratio, right? So how to interpret the results? High debt equity ratios here means less protection for creditors. Then higher the debt equity ratio mean, so what is the idea behind higher the debt equity ratio mean? Debt capital is higher than the equity capital, right? Then that is again showing the leverage issue, right? So then the majority of the firm issue then belongs to the third parties, the loan providers, right? Then that is not so good for future investors' point of view, right? So then that's the idea given by this interpretation part, right? Then if I move to the next one, another categories is activity ratios or the efficiency ratio, right? Under that you can calculate inventory or the stock that means stock inventory turnover ratio, right? Inventory turnover, right? Stock turnover should be, this should be turnover is missing. Right? Debt, yeah, you can see debt, this one, inventory turnover ratio, inventory turnover ratio. So now you can see inventory turnover ratio. So how to calculate it? Cost of goods sold, cost of goods sold divided by average inventory, average stocks. So how to calculate average stock? Opening stock, so the opening inventory plus closing inventory divided by 2. This is the way of obtaining the average stocks, right? If I want to calculate the inventory turnover ratio, actually there's the activity ratio, the efficiency ratio. Then how efficiently turning this inventory into sales of this particular organization, it is given by inventory turnover ratio. This is given as a time, right? This answer given as, after calculating this one, you can see the ratio, ratio as times. right? It may be 6 times, 6.6 times, 6.5 times, likewise, right? Right? Then if I go to our example again, what is the, yeah, we need to have cost of here, cost of sales. Cost of sales, it is given as, yeah, this one, cost, this is the cost of sale. So after calculating the opening inventory plus purchases, yes, after reducing closing inventory, you can go for the, this is the cost of sales, COS, cost of sales, cost of sales. We couldn't bond period. So that is the simple idea, right? So how to calculate? Then mean stocks as well. Right? So mean stocks. So mean stocks mean opening inventory plus closing inventory, right? Don't worry about the reduction. 14 plus 12 divide by 2, that is 13. So here that is the answer for here, right? Then first one, cost of goods sold, it is mentioned as 90, and that is 90. Cost of goods sold 90. Average inventory opening inventory plus closing inventory divide by 2. Here opening inventory 12, closing inventory is the opening inventory 20, closing inventory 12. So divide this by take the 32, total is 32, 12 plus 20 divide by 2, that is 16, right? Then the closing inventory is 16. So then you can obtain answer. This is 5.5 or something, right? But tell me the answer.
5.625. 625.
5.625 times, 5.6 times, right? What is the idea behind that? How to interpret this ratio? This ratio indicates that how fast, right? How fast inventories used or sold. A higher rate ratio is good form of from the viewpoint of liquidity and vice versa. So a lower the ratio would indicate that inventory is not used or the turn or sold or and stays in a shelf or in the warehouse for a long time, right? ඒ කියන්නේ තොගය වැඩිපුර ස්ටොක් එකේ තියෙනවා මිසක warehouse එක තියෙනවා මිසක විකිනෙන්නේ නැහැ කියන එක තමයි. So within the lower inventory turnover එකකින් ඇඟවෙන්නේ. Then if you go to the comparatively higher inventory turnover, that means it's a efficient company. Within a short period our stocks become sales. Have you got my point, doctors?
Yes, sir.
Do you have anything to clarify? Please ask.
No, sir. No, sir.
Right, good. Right. Now if I move to the next ratio, that is called debtors turnover ratio. Debtors turnover ratio. That is also important. Previously we discussed inventory turnover ratios or the stock turnover ratio. Stock විකුණුම් බවට කොච්චර වාර ගණක් පත් වෙනවද? වැඩි වාර ගණක් පත් වෙනවනම් please take down is the standard norm is 6, right? If it is 6, that is better, right? Standard standard norm is 6 times. If it is 6 times, that is better. That means what is the idea behind that? 6 time can turnover ratio එක 6 time. නැත්නම් stock turnover ratio එක 6 time. මොකක්ද කියන අදහස? වසරකට තොග විකුණුම් බවට පත් වෙනවා වාර 6ක්. ඒ කියන්නේ එහෙනම් අවුරුද්ද 6ෙන් බෙදුවාම 12 6ෙන් බෙදුවාම මාස දෙකකට සැරයක් තොගය විකුණුම් බවට පත් වෙනවා. Right? That is the idea behind that. මාස දෙකකට සැරයක් තොගය විකුණුම් බවට පත් වෙනවා. Right? If the answer is 6. It is accepted norm is 6. If it is below 6, so we have to careful with the treatment. So we cannot continue it long term. Short term we can manage, right? But long term you have to think. Then another one, debtors turnover ratio. Then we can see credit sales over average account receivables, right? How to obtain credit sales? If you go back to the question, it's clearly mentioned 60% of sales were credit. 60% were credit basis. Then if you go back to the annual financial statement, what is the right 60%? Oh, yeah, 60%. No, am I correct? 40%. 40%, 60% on credit basis. Yeah. Right? Then credit sales. Then average account receivables. Right? Credit sales 60% out of total sales. Total sales is given as here. Total sales is 200. 200. So if we take 60% from 200. What's the answer? 120, no? Am I correct? Credit sales is 100. Credit sales is 120. Then credit sales 120. Then account receivables, average account receivables. Right? Accounts receivables we can obtain again from annual reports. Account receivables, average account receivables here under the current assets. Debtors. So yes, current, then take the average collection or the debtors. Average debtors is 80 plus 120 divided by 2. Answer is 100. Then average debtors 100. Average debtors 100. Credit sales 120. 120 over 100, 1.2. Answer is 1.2. Am I correct? Is it clear? A lower debtors turnover ratio reflect liberal credit terms granted to customers, while a higher ratio shows the collections are made rapidly, right? ණයගැතියන්ගෙන් මුදල් එකතු කිරීම ඉතාම දුර්වල මට්ටමක තියෙනවා නම් තමයි මේ turnover ratio එක දුර්වලයි කියලා අපි කියන්නේ. right? turnover ratio එක අඩුයි කියලා කියන්නේ. මේ turnover ratio එක වැඩි නම් so then cash collection from creditors are more efficient, right? මේ ඇයි මේ debt collection නැත්නම් debt turnover ratio කියලා කියන්නේ? ණයගැතියෝ ඊළඟ මොකද කරන්නේ? මුදල් ගෙවනවා. ණයගැතියෝ මුදල් බවට පත්වීමේ වේගය density එක තමයි අපි කියන්නේ debtors turnover ratio කියලා. ඒතකොට ණයගැතියෝ මුදල් බවට පත් වෙනවා වේගයෙන් කියන්නේ මොකද්ද? ණයගැතියෝ ඉක්මනට මුදල් ගෙවනවා කියන්නේ. So මේ ratio එක වැඩි නම් හොඳයි. ඒකත් 6 තමයි සාමාන්‍ය පිළිගන්නේ. 6 is the standard norm. If it is below that, there may be a issue with the future activities because we have no good efficient level. Is it okay? Have you got it? Have you got the point?
Yes.
Right. Then if I move to next one. Period in month or in day, a week, so the in days, right? If you want to take this one as a one, take as your yeah, we didn't get it. Tell me the answer. Previous answer. Receivable turnover ratio. Then 120 divided by average inventory, that is also 100, no 1.2. Debt collection period. Is large. That is not efficient use of finance, right? Next one. Credit purchases divided by average account payables. Again, we can open from the financial statement. Gross profit ratio, that is also easy. Gross profit over sales into 100. I think if you go gross profit is Gross profit is 170. No? Number of days. So then you can compute number of days in years. Your credit sales. That is the average daily 360 days. Then divide by receivable turnover ratio. Then you can obtain the answer for that. Payable as well, right? Gross profit is easy. So gross profit is 70. No, gross profit is 70. Gross profit is 70. Yeah, gross profit is 70 over sales is 200. Gross profit is 110. No, 110. So then how to calculate? 110 over 200. Yeah, 110 over 200. Hundred ten over 200 divided by 100. That is 55%. Am I correct?
Yes, sir.
55%. Then gross profit is 55. Gross profit is 65. That is the gross profit as a percentage of total sales. And if it is larger, then we can see good that mean activity that mean performance level in that particular organization. Interpretation: gross profit margin depends on the relationship between sales price, volume, and cost. The higher gross profit margin is a favorable sign of the good management, right? So that is the favorable sign of the good management of the business, right? So if I move to next one, that is the net profit ratio, net profit over sales into 100. Operating profit ratio, profit over 100. So further you can see number of formulas for earning per share, dividend per share, and price selling ratios, and market value to book value. Likewise, there are a number of supportive ratios here. I already attached this document into your that means learning management pattern system. So now we can calculate relevant ratios based on these three figures, right? Yeah, I think you can prepare answer. So this is for both 2023 and 2024, right? So you have to calculate each and every statistical test, liquidity, then the inventory or the turnover ratios, then the leverage ratios, then profitability ratios, solvency ratios, long term. So you have to calculate everything and interpret the results. So you are given maximum of 10 minutes. So within 10 minutes, you can go through this document, right? So then you have to calculate current assets, current quick assets ratio, current asset ratio, then the gross profit ratio, and so on. So for both year 2024 and 2025. So after preparing it, you have to prepare the table, right? You have to prepare a table. It should contain of containing here. Yeah. you have to you have to prepare a table. Sorry. You have to calculate the ratio year 2023, 2025, and so on. So you have to provide answers, current ratio, quick ratio. Likewise, you can put here, then you can compare. That is the objective of this calculation. So you have to prepare this one. So then this is the remarks. We have to explain and interpret what happened to the ratios during year 2023 and so here 2023 and 2024. So you are given data in for 2024. Right. Can you do that task within 10 minutes time? Doctors? Is it okay? Right. I think you will do that, right? You're on the way. Okay. Have you computed the answer, doctors? Can you hear me well? Doctors, can you hear me well? Doctors, can you hear me well?
Yes, sir.
Right. Have you prepared the answer?
Still doing, sir.
Right. Then you can do this task actually, right? You can do this task. Then not only for that, so I prepared another question. So you have to answer for next one also. So you are given guidelines to prepare these ratios, right? So you are having guidelines to prepare these ratios. Number of slides here. Again, you can refer the previous sessions as well, right? So then you are given the second question. Here again a similar type of question, so you have to practice them, right, to obtain this kind of similar ratios, right? So again you have to prepare ratios for year 1 and year 2, right? So then prepare a table and explain uh, that we interpret the results, right? Then it is important to do that. With this awareness, I want to pass this message, right? So your assignment also based on this one, right? So you have to collect, you have to download a financial statement, right, from different types of company, right? So then take 2 or 3 companies relating to that particular industry, right? For example, if you think about the health industry, so you can download annual reports for Asiri hospital and the Lanka hospital or something, right? So then you can compare. If you obtain 2 different manufacturing organization, so you can take 2, and also you can consider at least 2 years, right? 2 company at least 2 years, right? So then you can compare, you can prepare this kind of ratios, and you can interpret the results and what is the yeah, then you can make comparison, and ultimately you can provide a report. So I will prepare, yes, I will send this assignment in writing, right? So up to that document, so you can collect data and prepare ratios. Then based on the uh, document, you can prepare the final report, right? The assignment report. So then this is regarding the assignment, right? I think you have clear idea about it. Am I correct? අපේ assignment එක තියෙන්නේ මොකද? assignment එක තියෙන්නේ company දෙකක annual reports අරන් ඉවරලා අවුරුදු දෙකක්. ඒතර company දෙකයි අවුරුදු දෙකයි. එතකොට එක company එක progress එක බලන්න පුළුවන්. දැන් අපි දැන් බැලුවා වගේ මේ එක company එක අරන් ඉවරලා 2023 24යි compare කරා. ඒ වගේ companies දෙකක් අරන් එකම sector එකේ. එතකොට අපිට compare කරන්න පුළුවන්. right? compare කරන්න පුළුවන්. company දෙක compare කරන්න පුළුවන්. එකම company කලින් අවුරුද්දත් එක්ක compare කරන්න පුළුවන්. හරි? compare කළා report එකක් හදලා ratios අපිට ඒ වගේ තියෙන progress එක එහෙම නැත්නම් මේ comparison එකක් කරලා අපිට so we can provide the final reports, right? We can provide final reports from here. That is the way of doing this assignment, right? Then I will provide the overall document to explain it, right? Then just you have to collect data, so you can download 2 annual reports, right, from 2 companies in the same industry, right? You have freedom to select the company, right? Don't take similar company from by each of you, right? So then you should have a leadership, right? I think as a leader, so you have to divide number of companies, right? Number of companies among members. How many members here? Doctors. How many doctors in this program? Around 20. Am I correct? කී දෙනෙක් ඉන්නවා ડોක්ටර් මේ ප්‍රෝග්‍රෑම් එකේ?
Around 30.
30. එතකොට 30 එතකොට සිමිලර් කම්පැනිස් දෙකක් එන්නේ නැති වෙන විදියට හරි එකක් සමාන වුණාට කමක් නැහැ දෙකම සමාන නොවන විදියට you have to make comparison, right? එතකොට කවුද group leader? Doctor group leader කවුද? group leader කෙනෙක් ඉන්නව නේද doctor? batch leader කෙනෙක්?
Dr. Shivantika.
Dr. Shivantika, you can assign a number of companies for each doctor, right? Then without having the similar name under two companies, right? So then it is better to yes, get the consent from each doctor. Then ultimately you can make differences between companies. Otherwise you can see the same company, same years. So that is not yes, it will not provide clear experience for you, right? Then please prepare, Dr. Shivanti, please prepare the list of companies and the list of doctors and the respective companies, selected companies, except the banking and finance sector, right? So banking and finance sector, you can see the different types of financial information, right? Interest and interest income. Their income and expenditure are two different, right? Therefore, except banking and finance, so there are two yes, around more than 200 companies in the Colombo Stock Exchange, right? So you can obtain companies or combination of companies. Yes, you have take two company for 2 years time, right? It is better to collect data relating to the, that means latest data, right? Latest information 2024, 2025 to 2025, right? So then you can obtain results and analyze and prepare the document. So I will provide the guideline to prepare the document. Until that, so you can divide your groups into your group and relevant companies, and they can collect data and prepare the ratios as given here, right? Similar to this one. So you can prepare different types of ratios and interpret the results. Ultimately, you can prepare the assignment reports. Is it clear, doctors?
Yes, sir.
Right. Then do you have enough confidence to prepare answer for these two questions? Right. Then you can prepare it. Then tomorrow you have again lecture relating to this topic, particular course unit, right? That is regarding the finance and financial decision making, right? So senior professor Chitra Ranjani will come to discuss those matters, right? So with that notice, then I would like to wind up the session. If you have any doubt now, you can ask, right? Do you have anything to clarify, Dr. Shivanti, or any other doctors? Do you have anything to clarify?
No, sir.
Right. Then your duty is to select a number of companies, right, without clashing, right? So then next time we can discuss how to make short-term decision and the long-term decision, right? So we'll discuss later. Okay, thank you very much.
Thank you, sir.
Thank you, sir.
Thank you, sir.
Right, please come with your answers, right, next time for these two questions. Okay.